Hello and welcome to this video. And in this video, I'm going to be teaching you about top-down analysis. Top-down analysis is very necessary for your trading. Okay, without top-down analysis, your trading is going to be ineffective. All right, so if you have been having an ineffective trading, maybe you place a sell position and then the market just sell for a little while, then it goes against you, then you need to understand top-down analysis. All right, and that's what I'm going to be teaching you in this video. So without no further intro, let's get to what we have for today. All right. Now, what is top-down analysis? Just like the name implies, top to down. Okay, it's basically you analyzing from the highest time frame down to the lowest time frame. Okay. Now you all know that the highest time frame we have the weekly, maybe the monthly also. All right. We can also add the monthly, but then I am not a swing trader. All right. Personally, I day trade. All right. I'm an intraday trader. And so I don't need the monthly time frame in most cases. All right. I just need maybe the weekly, the daily, the H4 time frame. Okay, now those are the time frames I regard to as my higher time frames. All right, so now it's top-down analysis, you analyzing from your biggest time frame down to your lowest time frame. All right, so now on the big time frame, what are you looking for on the big time frame? On the big time frame, you are trying to look for what is called directional bias. All right, you want to look for the direction of the market, where you think the market will head next. All right, now on the higher time frames, you are not looking for specific entries, you're only looking for direction. Where is the market going to? Okay, the market might likely buy today. That is the information you want to get from your higher time frame. But then when you go down to the lower time frame, you are looking for where am I going to buy from? All right, where is my buy entry point? These are the informations you have to look for on your lower time frame. Now, when we talk about lower time frame, you can talk about your H1, M15, and M5. All right, but then I'll advise you stick to the H1, M30, and M15. Okay. Over time, once you maybe become professional or once you are good enough, you can then begin to migrate to your 5 minutes time frame. But for the purpose of this video, I understand that not everybody watching this video is going to be a professional. So I'm not going to be going down to the 5 minutes time frame. I'm only going to be sticking to the 15 minutes time frame, 30 minutes time frame, and the 1 hour time frame as my smaller time frame. And then for my higher time frame, I'm going to be sticking to the 4 hour time frame, the daily time frame, and the weekly time frame if need be. All right. But in most cases, I'm going to be using just the daily time frame. Now, what we have on the chart right now is boom 300 index, all right? And this is the daily time frame for 300 index. Now, I am going to analyze this, and you're going to see how I'm going to analyze from the daily time frame down to my entry time frame, which could be my 15 minutes or 30 minutes time frame, all right? Now, on the daily chart of boom 300, this is what we have. We can basically see price moving, okay? Currently, you can actually just say price is ranging. All right. Now, but we want to be specific a little about the range. Okay, so I have this to be my swing high, all right, to be the highest high, and then I have this to be what I have this to be my swing low. All right, I have this to be my swing low. Okay, now this is the trading range. All right, this is where price seems to be trading. Price has not gone above this high, and price has not gone below this low. All right, now the thing here is, are we bullish or are we bearish on this market? All right, now I'm going to say we are bearish. All right, now why am I going to say, or why do I think we are bearish? Okay, now if you look to the left, you're going to be able to see that, okay, price did what? Violated this high. All right, price broke this high. We have a market structure shift here. All right, and then price seemed to have grabbed internal liquidity on this side. All right, price seemed to have taken out this high, and then we had the sell from here. Okay, so price sold to do what? To take out this low. So we have sell side liquidity taken. Now, another thing that happened here was that price also went up to take out buy side liquidity. All right, so now in this kind of a scenario, what do you think is going to happen next? Now, in my own case, I really think that price is still going to sell. All right, so from my daily time frame, I still anticipate that, okay, price is going to sell. And then fortunately enough for us, at the cost of this video, or at the cost of recording this video, price happens to be at our or around the sell region. Okay, now I consider this week a sell region for me. Okay, I consider this week a sell region, or should I say this other block? Let me just say this whole other block a sell region. All right, now price seems to be trading in the other block, so basically we are looking for sells. All right, now from the daily time frame, I have been able to discover that, okay, I think that price should sell. So now this is my directional bias. Now from the daily time frame, I'm looking for sales. So I'm going to go down to my 4 hours time frame and see if I can also find some more information on the 4 hour time frame. All right. So let us see what the 4 hour time frame has for us. Now on the 4 hour time frame, we can see a couple of information. All right, we have this high over here, which of course I believe we have some sort of liquidity line over there, or you might want to say it's an inducement, whatever. Okay, so now from this time frame, okay, don't forget from the daily we are looking for what's it called, for sales. We expect a sell market. All right, now looking at the chart, you can also spot out that okay, around this point we also have liquidity line here. All right, so there is really a high possibility that price is going to sell to most likely take out this low. All right, but that is not our concern for now. We want to see how we can actually take advantage of the current price, okay, how we can actually get to find sell entries. Now, seeing this, we have liquidity line above here. Now, this is something you should actually take note of. Before you sell or before you want to go in for a short on this market, you have to see some confirmations for a reversal. Now, when we talk about confirmations for a reversal, you want to consider market structure. That is where you want to see maybe a market structure shift, or you want to see a complete change in structure. Let me give you an illustration of what I mean, okay? If price happens to be on an uptrend, sorry for that. I'm looking for my part 2, all right. Now, if price happens to be on an uptrend, okay, the only reason, or the only time we know that the uptrend is about to end is if price violates previous low, all right? And then we get to maybe look for a retracement, maybe to an imbalance or another block, and then we look for shorting opportunities, all right? So this is basically what we're going to be looking for on this time frame, all right? But then we are going to have similar details with this on the H1, all right? But then we can actually just zoom in and then still do our thing right here. It doesn't matter. Now you can see price almost started to form that structure over here. I was actually following price yesterday. I was trying to see if I was actually going to get a sell entry, but price did not actually continue the pattern. So price violated this high, all right? And then we have this low over here. And then instead, price did not break below this low, but instead price swept liquidity, okay? If you look, you can see that the wick, you actually see that the wick went a little below this other wick, all right? So now that is actually a sweep, all right? Price just grabbed liquidity, the sell side liquidity below this low, all right? So now when that happens, you should actually understand that we will most likely see buys in the market. And of course, you can see instead of the market to maybe give us what we want, market actually started buying from the sweep of the liquidity, all right? Now, do we still have a chance, or is it still okay possible that we can actually sell this market? Yes, of course, all right? Yes, of course. But with what has happened right here, all right, if we do not see something of this such, if we do not see something of this nature, maybe from around here, price just does something like this to break this low, and then we get to look for entries on the retracement after the break of this low, all right? And then maybe we sell from another block and imbalance. Now, if we do not see price do something like this, all right, what we will actually see price do, we'll most likely see price do something like this. Don't forget, I told you that we have liquidity line above this high. So we will most likely see price do something of this nature. All right, we might just see something like this, whereby the idea is that whereby price will actually buy to take the liquidity above this high, and then most likely we could actually see the sell coming from this other block above. All right, so this is how you actually analyze from your daily. Now, where do you seek to get specific entries? Now, this is the moment when you go down to your 15 minutes time frame. Now, it's on your 15 minutes time frame that you begin to look for these other blocks, all right? Or maybe your 30 minutes time frame if you do not find enough information on the 15 minutes time frame. Now, this is woman crash, so you might not find enough information on the 15 minutes time frame. So you might maybe want to use the 30 minutes time frame. Make sure I'm going to advise, if you're using boom and crash, use the 30 minutes time frame, all right? It's going to give you more less confusing slicey entry points, okay? So now it's on this time frame that you begin to look forward your structural breaks. It's on this time frame you begin to look for your structural breaks and your imbalances, all right? So don't forget, top-down analysis from the daily time frame, On the higher time frame, we're looking for a directional bias, and then when you come down to your 15 minutes or 30 minutes time frame, you are looking for specific entry points. All right. So I believe this video was helpful. Don't forget to follow me on WhatsApp, Instagram, Twitter, and also Facebook. All right. The links are going to be in the description box below. All right. So I'll see you in my next video. It's your Trader King Wesley, and I'm signing out.